Everybody, so good afternoon on Sunday, March 25th. In this video, I was doing some research on KEY CORP Bank because it is a bank stock that I am looking into. And I just spent roughly about 45 minutes just browsing some stuff and trying to pick out some key things that I think might be useful information for anybody like myself who is considering picking up some bank stocks during this, event going on with banks and whatnot. So this is going to be specifically about Key Bank. And like I said, there's a lot of information out there that I do not have. But this is just a few things just to get the wheels spinning. So first, I'm going to show here with the dividend being the 7.28. We know that. So we know that Key Corp pays a dividend, right? So that's something that I wanted to take into play when I started researching a lot of my stuff that I've been looking at for Key Corp. We also seen the dividends being increased in the last video, so I didn't put that in this one. But we know that they increased their dividends and so forth like that. So I don't want to leave it on this too long, but we just want to take in consideration that that is the dividend that they are paying. Okay, so earnings that I've looked at, if you look at all of last year's earnings, you can see the dark blue is the estimate, and then the pretty ocean blue is what was reported. So it's went down a little bit in this last report, and I don't know if that was, I think this is after the Fed started doing the 0.25% rate hikes, because they've been doing that for a bit now. So I think that this could be showing some of that. I might be wrong. That's just my guess. So the green line here is what I'm saying, okay, with the Fed hikes going up, and I noticed that Key Corp is passing that 0.25% on to consumers. So therefore, I'm thinking they may have less consumers. So the earnings could go down coming into this year and so forth. That line's just an estimate. I have no idea where the earnings will go down, but I, would say that they probably will go down, right? Which makes it good for people who are not in any bank stocks who want to get into these bank stocks at a very good price where there's a lot of upside for the risk. I think this is good. So that's just giving an example. I anticipate it will go down because of the Fed interest hikes. And it will probably have another 0.25% hike in May where they do that. And I wanted to share one of the guys that I follow, and he's very, very good about putting all that information out there. So Clear Value Tax is his channel, and real quick, and then I'll get back to what I was doing here. But I think they said his name. Let's see, somebody had it on here, but I can't find it within this. Brian. Oh yeah, that's what I was thinking. So his name is Brian. He puts out a lot of good information, especially about everything going on. So I'm not going to talk about that stuff, but he's a great source to go to. But this company, based on what I was researching, they're going to pass that on. And he also, I think he was saying that there's a good chance about a 0.25%. So for December, you can see here, earnings per share 0.38, so that's definitely down, and we can expect it to go down, because like I said, the Fed's hiking it because of everything going on. So that's expected, but since that's going down and it's pushing people away, that presents an opportunity for folks like us to buy into this company, in my opinion. Okay, and here I was looking at, I looked at the website, how does, banks make their money? Loans, credit cards, services, financial services, stuff like that, right? So I looked at a few of them. I tried to look more into some of these, but the webpage wouldn't come up. I don't know why. Okay, but so credit cards, they don't charge an annual fee, and that goes to this next page, which is about that. You know, they do 1.5% cash back, 2% cash back. So no annual fee. They're not getting money from that. They are getting money, you know, when you look at the regular APR and the purchases. And there was two different numbers for this, I noticed. But for people that use this card, if they do leave a balance, you know, this is a form of revenue that the company gets, right? Balance transactions, $10 or 4% of the amount of each transaction. Late fee, $40. Wow, that's up there, right? You know, for folks that, you know, accumulate late fees. That's something I do not do. If I can help it, you know, if it's a bill, maybe I get like a $5 late fee every so often, but I try not to do any late fees, period. But this is for the credit card. I tried to look into like the debt consolidation one. I know that they also said that they do financial advice and stuff like that. So there might be some ways for people to do brokerage here. I'm not 100% on that, so I should look into that part. But debt consolidation and so forth. And I know they did home loans, personal loans, stuff like that. So those are ways that they are, you know, making their money. Some other stuff that I looked at here, and these here I have the webpage up so that way I can reference it to y'all. But in some of the news that they did, they raised the prime lending rate from 8% to 8% from 7.75% effective March 23rd. And I just put here, I assume they're passing it on to the consumers, which could lower business. So that goes back to expecting lower earnings. But that also gives us great time to buy into it. And a lot of people are. Key provides deposits, lending, cash management, and investment services to individuals and businesses in 15 states under the name Key Bank National Association through a network of approximately 1,000 branches and approximately 1,300 automatic teller machines. Key Bank is a member of the FDIC. We already see there that, you know, they do step in, so consumers do have that reassurance given that what happened to the bank in California and so forth. It says stuff that I found, Key Corp has generated $1.92 earnings per share over the last year. The company has a debt to equity ratio of 1.76. So I'm assuming that's the debt to the equity they have. That's not bad. We also looked at the balance sheet in a previous video when I was mentioning these, and for a bank, it's you know, not bad, especially a small bank. So, and this here is set a quick ratio of 0.84 and a current ratio of 0.84. Not really sure what that means, honestly. I just put it there because probably something pretty important. Something else here that I was looking at, and this I thought pretty interesting. So, insider activity at Key Corp. In other news, Director Ruth Ann M. Gillis acquired 2,000 shares of the business's stock in a transaction dated Tuesday, March 14th. The shares were bought at an average cost of $12.95 per share, and now I think we're setting at $11 and some change, for a total transaction of $25,900. Following the acquisition, the director now directly owns 42,961 shares in the company, valued at approximately $556,344.95. The purchase was disclosed in a filing with the SEC, which is available through this link. So if y'all want to check that out, this is the website up here, MarketBeat, and you can check out the link. This here, they did a repeat of what she did there. But okay, so that's a good one. You know, she's buying shares, but. And opposite of that, it also says, insider Amy G. Brady sold 45,000 shares of the firm's stock in a transaction on Friday, March 10th. The shares were sold at an average price of $15.58 for a total transaction of $701,100. Following the completion of the transaction, the insider now directly owns 119,121 shares in the company, valued at approximately $1,855,905.18. The disclosure for this sale can be found here at that link. 0.54% of the stock is now owned by insiders. So some bought, some sold. Does it necessarily mean like that bank's going down? No. It just means like, and if you noticed, Ann Gillis, she bought at $12.95 because it's hard to know what things are gonna end and whatnot. And then Amy Brady sold at $15.68. So they anticipated this because of the Fed hikes, right? So they already know they're probably going to get less consuming and they're going to make less money off of the interest because that's how banks normally make their money. Okay, so something else that I thought, was really, really good stuff here. And I'll tell you in a second. But it says institutional investors weigh in on KEY CORP. A number of large investors have recently modified their holdings of the stock. B. Riley Wealth Advisor Incorporation boosted its holdings in KEY CORP by 6.6% in the fourth quarter, which is for 2023. B. Riley Wealth Advisors now owns 85,666 shares of the financial services provider stock worth $1,492,000 after acquiring an additional 5,336 shares during the period. Rockefeller Capital Management lifted its position in shares of KEY CORP by 15.1% during the fourth quarter. Rockefeller Capital Management now owns 274,716 shares of the financial service provider stock worth $4,785,000 after purchasing an additional 35,950 shares in the last quarter. Voya Investment Management, LLC, boosted its stake in shares of KEY CORP by 2.2% in the fourth quarter. Voya Investment Management, LLC now owns 352,577 shares of the financial service provider stock valued at $6,142,000 after purchasing an additional 7,624 shares during the period. St. Germain DJ Co. Incorporated acquired a new stake in KEY CORP during the fourth quarter valued at $162,000. Finally, Natixis grew its holdings in KEY CORP by 24.2% during the fourth quarter. Natixis now owns 75,256 shares of the financial service provider stock valued at $1,311,000 after purchasing an additional 14,660 shares in the last quarter. Institutional investors and hedge funds own 82.11% of the company's stock. So that tells me that hedge funds and all them, they're seeing this as this is a good bank. It's not going under, and we've seen the earnings. It's making money, so they are earning money, and we could see that they do have room to go down if they need to with what the Fed is doing with the markets and how it's going to affect the economy. And what's going on here is a lot of these institutional investors and whatnot, in my opinion, are looking for good assets on the cheap. That is why I'm looking into companies like this, and I've been researching. Like I said, I spent like 45 minutes browsing stuff. I've found all kinds of different information. I didn't want to go over the balance sheet again because I kind of briefly looked at that in a previous video. There's a few things, like I read a lot about the bank. Everybody knows what a bank does. I kind of briefly mentioned that. But this here was good stuff that I thought was good to share. And I'm just like, yeah, this is definitely something that I think I'm going to buy because of that, increase. And I'll pull it up right now for those that did not see this in the previous video. I want to be able to show that it does, it does increase it. Now this ad comes up here now all the time, so I have to ignore that when it pops up. Because that ad right there is probably going to pop up and block it. Hopefully it don't. But okay, so you can look and you can see from the history, it pays quarterly, and the dividend has been going up a little bit at a time, similar to what Coca-Cola stock does. Except this here is at a point where it's getting pressure put on it, which makes it available for us to buy into. So once this all clears and the smoke clears and the Fed's like, okay, we'll start lowering interest rates hikes, which could, it's probably going to be like a year, 2, 3, who knows. But this gives you time to buy. And then when they start doing that, these companies are going to go way up. So this is a long-term investing stock, in my opinion. Are they going to keep, increasing the dividend by about a cent, it looks like? I don't know. They're going to have less earnings. We already looked at their, equity to debt ratio. They seem pretty smart on the concept. They don't want to have too much debt. So maybe we won't see a huge increase in the dividend. They might keep it at, 0.20, 0.5, or they might knock it down a little bit during this time where it's more expensive to borrow money and there might be less people borrowing from them. But nonetheless, once this is all over with, in my opinion, this company is going to go back to the ways that it is doing here, and it's given us a great opportunity to buy into it because a lot of hedge funds and so forth have seen that sell that lady did at like 17. I'm sure she's probably going to be buying back in lower. So this is just some cool stuff I've been looking into, and that's why I'm really looking at buying into this in particular stock when I get some more cash and whatnot, because it took that nice dip. And then if you go straight across, I normally do this with the paper. Don't ignore that thing. Just look where my arrow is. If you go straight across, hardly do you see green below, right? Most of it's up because the stock costs more money. So this stock, I think, is being undervalued, but it's a good one. And that's what I want to look for. That's what I've, by doing a lot of studying and reading about Warren Buffett, and Charlie Munger and all these other guys, that are great investors. Yeah, this one, the whole stock market isn't going straight down, for the most part at this time. But right now, it's like the banks themselves are getting hit a little bit. So it's a great opportunity to look into them. Obviously, I still really like the dividends, high-yield dividends and so forth that I'm pursuing. But this here seems like an opportunity that you just don't want to pass it up. Because hardly does it come down that low. It did back here in 2020 briefly. We all know why. Back here in 2016 and stuff. I'm sure something happened there. Then back here, you have things going down. And that's mostly all in 2011. Well, 2008, you get in, and then we have 2011, with what happened in New York, and just a lot, So before that, the company was never this low until it was back in the 90s, in pre-90s. So this is a company that I think is really, really good to check out and look into. I personally am going to look at buying, I'm thinking about like, I don't know, $2,000-$3,000 worth of this company. I have to wait until I get that dividend, unfortunately, but I might turn around and actually just borrow a little money from, a card, so that way I can get in on this and seeing what it does, because this will probably go up Monday on market open. I hope it goes down, honestly, so that way I can look at taking a cash advantage, buying a position, and then when I get my dividend from Zim, I'll just go ahead and pay that cash advance right back off, because I don't want to miss an opportunity in KEY Corp, because it might not be here long. As you've seen with the dividend and hedge funds and so forth, they're jumping on this. So we got to see what happens. Could it go down more? I hope so. Do I think it's going to go green Monday and probably into Tuesday? Yes, I do. I think it's going to go green, but I hope it don't. But anyway, so I just want to, share this with y'all. This is just a little rough review over KEY Corp, and I'm going to get into it. I think this is a good opportunity to get into it, a nice, good bank stock. So I'm also going to be looking at, what was that one I was looking at? Zion, and I might do a video about Zion tomorrow once if I can find some good stuff to share. Like I said, this wasn't a huge in-depth thing about KEY Corp, but hopefully it was a little bit something that at least gives you more, you know, like, yeah, I want to look further into this. At the very least, I hope it's just a little bit to like get, you know, things working in the right direction. But anyway, I hope you all have a great Saturday for the rest of your evening, and I will catch you in the next video. See ya.